Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the Forex Peace Army daily video on Forex markets. Today guys we will take a look at the Japanese yen, because today is Friday and I just do not want to start some conversation of some long-term setups or something of that sort. Besides currently now major objects that we usually use for our daily updates is the euro currency and Great British pounds. Nothing was really interesting, so market almost has reached our predefined target yesterday before the European Central Bank meeting has started. So I will show you the picture on the euro currency. So you can see upward action is developing, so nothing really is going on here, something curious. Market tending to the upside. We said that the first destination point market should reach the neckline of our initial inspection, and after that we will see what will happen. Yesterday on the European Central Bank meeting, you can see that market almost has reached the 1618 target that we have specified from this A, B, C bottom. It's 1618, almost has been hit. Also, this is the monthly pivot resistance one. So we said it's approximately 1340 area should be hit, and after that we will see the clarity. So right now you can see market almost has reached it. Now it stands in some retracement, so we will see what here will happen. Maybe market will show some retracement based on this, some kind of the engulfing pattern, something of that sort. That's why it's really currently not really interesting to talk about it. So on the Canadian dollar, our bet yesterday was not bad. So you can see double ripple pattern indeed has been formed. So yesterday we have started our discussion on this candle. We said all we need is just close below the 3x3 moving average. Here it is, close below the 3x3 again, second close. Sorry, just close because this double ripple buy. So, and second close above. So here it is. It's confirmation of the double ripple pattern. Market start moving up. Now it stands very close to its target. We said that this should be minimum 50% resistance of the whole downward action. So it's approximately 29.75, something of that sort. So it hasn't quite reached it yet, but probably it could happen today. So this trade also was not bad. Now we would like to talk about the also tactical short-term setup that we have on the Japanese yen. Now we will not talk on some long-term analysis and fundamental parts of the Bank of Japan policy or something of that sort. We just have the pattern on the daily chart, and it's really could bring very nice upside potential. Especially situation right now on the Japanese yen is very unstable. So market's really moving from up to bottom depending on what we have. On bad United States data, market drops. On some supportive issues, market's running up. This policy of the Bank of Japan is also impacts on the market, so that's why this volatility on the Japanese yen right now stands very significant. And here it also stands for at all very important levels. 100 even marking on the Japanese yen is very important psychological level. But currently we will mostly speak on this Thursday action. So take a look that yesterday we've got the bullish grabber on the daily chart. The attractiveness of this pattern stands with this simplicity. And it's very good relation between the risk and the reward, potential risk and reward of this trade, because reward will be above this top. So if grabber will work, market should take it out of this top. Maybe it will be on the way to the monthly pivot resistance ones, 104.80 area. Loss will be if market will drop below these lows, and if it will erase the grabber. So you can see that the ratio between the risk and the reward is probably more than 1 to 4 or something of that sort ratio. That's why we think that's really not bad interactive setup that we could discuss today. On the 4-hour time frame chart, market also stands, as you can see, on the 618 support of this whole upward direction. So market has reached some level, dropped precisely. It's 109.35. This is the 618 support. Now standing in upward direction. A bounce up has started. This particularly is our bullish grabber. Now market stands in retracement back inside of its body. So invalidation point for the grabber stands at its bottom. So we roughly could suggest these lows as the invalidation point. So if market will drop below these lows, the grabber will be erased and setup will fail. That's why our task is to take position as close to these lows as possible to minimize potential risk as we could get on this pattern. So we could do this differently. So you could act differently. So for example, right now market stands in the confluence support on the hourly chart, most recent moving up. Here you could, for example, take the position blindly at the confluence, placing the stop below the invalidation point, or you could wait for 618 if you think that market will drop to the 618. But anyway, initial stop should be below the lows. Also, you could, for example, wait for some pattern. This is for you guys who are mostly use the patterns as your driving factor, as the reason for taking the position. For example, if market will form here the butterfly buy on some intraday chart, maybe on the 15-minute chart or something. For example, here, so you could get, for example, butterfly buy. You could use pattern for taking the position. Or finally, for most conservative traders, you could wait when the market indeed already will start upward continuation. So that's retracement down. Market will start move up. You could try and take position on the minor retracement when the market already established the trend. So this, as you can see, it's a lot of different possibilities how we could do this, how we could take the position here. That's why if you would like to take part in trading on this grabber, you could choose what you like more in the current setup. But in general, this setup is rather simple. So if market will hold above these lows and turn to the upside again, its minimum target will be approximately somewhere around monthly pivot resistance 1. Now we just need to get the right moment where to take the position, how better to do this. So, but this, as I said, very different approaches exist. So you could use what you like more, how you usually do this, and acting around the fib levels. That's probably all for today. So let's see what we will get, because as I said, yeah, I like grabbers because they are really very simple. And when you see the pattern, you already know where will be invalidation point and where will be your objective point. That's why it lets you to make a really simple decision, trade it or not, and how better to take the position with this grabber. So that's also recently we guys mostly are moving through the exotic currency pairs for us, since we're mostly watching for euro currency, Great British Pound, or something of that sort. But today and yesterday we were looking at the Canadian, now we are looking at the Japanese yen. So you can see you now know what particular currency pair will provide you some nice setup for trading. So let's see what we'll get around this grabber on the Japanese yen.